Sunday Night Futures Live, and we have a lot to go over. We're going to kick things off with the opening price action of the futures market. We have headlines that you cannot believe that are coming out. The Federal Reserve is very, very active this evening, or effective tomorrow. To be perfectly, what's the word? Direct. Be what's the word? Specific. We're going to talk about our trades last week. We're going to talk about our strategy moving forward because a lot is happening in the markets. And I got to tell you, if you're carrying long positions overnight on margin, folks, you really need to think about that strategy, because at some point in time, the game of musical chairs is going to stop and somebody's going to be left without a seat to sit down on, and they're going to hit the floor. But there's going to be a lot of those people. So I just got back from a long weekend down in I'm usually in Miami when I go down there, but I was in West Palm Beach, Delray Beach, Fort Lauderdale a bit. So I literally just got off the plane, walked in the house, and I'm going live here playing catch up. So I apologize for being late. I didn't do the week ahead commentary. Why? My plane was delayed. So we're going to do that tonight. We're going to do it live, the week ahead commentary. And we're going to talk about the overall markets. What do they look like on a closing time frame? We normally do this on Thursday with one trading day left to go, but I was off. I took a couple of days off. Now we're going to do it tonight. So let me share my screen. Let me first say hello and then share my screen. Seymour Rivers, welcome, sir. Franklin, hope you enjoyed. It was a really good weekend. Yeah, I had a really good time. Yeah, it was good. It was good to get away and veg. Bob, we assume that you stayed with Bill Gates at his horse farm in West Palm Beach. I was not welcome there. In fact, I went to Mar-a-Lago, and I went there very early in the morning because the night before I drove past it. They had an event going on. You couldn't stop at all. I mean, cops out there. They must have had a fundraiser. So I went the next morning, and I went just walking past the front of it, and I went to stop to do a recording, a video recording. I posted it on Instagram, but the security came out, and they're like, hey, you got to keep walking. So I understood. So I still put that video up, but I kept walking. I was not about to test these guys. So it's beautiful. West Palm Beach, beautiful. I haven't really spent that much time there. Thank you, Denny. Yoga Mac, fresh off the plane. That's Leisha. Thank you. RB, happy Sunday. Happy Sunday to you, sir. Microsoft and Coin, please. I'm going to talk about them because I see opportunity there. Very, very short term on both. Both very short term. Believe it or not, as a short-term scalp, but I think they're going higher. Trader Isaac, hello, sir. Mr. Jeff. Yeah, it was really nice. I was around 70 degrees when I left there. I was never too hot. It was just right. And I got here in New York. It was 34 degrees. Big difference. Buster Stacks, here, brother. Pete, good evening to you, sir. We will be looking, Clark. Yeah, very, very good point. We're going to be looking at the yield curve. And guys, I've been coming on here for 2 years, sporadically initially talking about the yield curve, but more lately every week. And what we've been projecting is happening now. It's happening now as we speak. And it's not good. The yield curve is steepening and steepening dramatically. Paul M., Palm Beach County, my neighbor. You're in Palm Beach. You live in a beautiful neighborhood. I'll tell you that, as you know. You're blocked again? I don't remember blocking anybody in the past couple of weeks. Those spammers stopped. We'll take a look at it. But no, you can't be blocked. You're leaving a comment. Leaving a comment, Falcon. I'm seeing them. Pedro, good evening to you, sir. TZ Burton, I love Florida. I wish I still lived there. Yeah, I really like it there. Sammy. Bob, great to have you back. Thank you, Tim. Thanks for the emails. Appreciate it. Before you came on tonight, people were lined up here like you Christmas sale. That's good. Okay. I'm sucking down coffee. I'm exhausted. So it was a good weekend, but a really, really tiring weekend. All right, let's do this. Let's get into the futures action. We have so much to go over, and it's really important stuff. Let me share my screen before I forget to, as I usually do. There we go. And we are off. The futures action is open, and we are looking at the S&P 500 15-minute, NASDAQ 100 15-minute chart. And we had a big gap up, a reversal bar. I think we're moving up a bit higher here. We're up over 1/3 of a percentage point. The reason is, I'll tell you in a minute. I'll tell you in a minute why I think we're going up higher. But ultimately, we will be shorting this rally. We to bring people up to date who are not members. We went into last week short of a few positions. Nvidia, I bailed on the short, and then I went long. We made the money back that we lost, and we plus some. So Nvidia, those shares got called away from us. So we have a large cash position going into the new trading week, and the decision to get long the market was the right decision. But I'm not carrying any major positions overnight. No way. So NASDAQ now up spot 4.2%. Let's move on. The Russell 2000, it is up spot 6% off the session high. 15-minute RSI and Stokes are bullish. Odds favor bulls here. The Dow up spot 2%, a laggard. And it makes sense, though, because yields are probably pulling back right now. But this is a bullish setup. Odds favor bulls on the Dow, which has been lagging the S&P 500 of late. Now, speaking of the S&P 500, up spot 39%. We're off the highs. We're holding the 50-period moving average on a 15-minute time frame. RSI strong, Stokes strong, odds favor bulls. So I think that we're going to open up this week on Monday morning. We will have green futures, absent a headline that comes out and just sends things in the wrong direction. Now, the U.S. dollar is in trouble. It's in a lot of trouble. Already, well, this is wrong. This is wrong. This is wrong. This is accurate. The tick, the price reads accurate. Unless they're saying it's down 0.5%. Oh, that's what they're saying. They're down. It's down 0.5%, I guess, from the closing high in the after-hours session on Friday. But the dollar closed out the week. We're going to go to the chart in a moment. Closed out the week very, very weak. It was a rejection at resistance. It was a failed breakout. Bullish for gold. And speaking of gold, man, if you are not currently long of gold now, you got to start thinking about it, because it is. We're going to go to a chart of the monthly chart of gold in the moment, folks, and it took off. And I'm going to tell you why it took off in a moment. It wasn't the technicals. The technicals going into the month of March were not good. It is the Federal Reserve and what's going on over there. And we're going to go to the chart of what's going on at the Fed in a moment. And it's the why behind why the equity markets, at least technology stocks, the triple Qs, are going to rally. Silver up 1.26%. Here, take a look at silver on a 4-hour time frame. Look at this rip. Take note of when it began to rip. Thursday morning. We're going to come back to this. It's probably going to hold true for gold as well. Thursday morning. What happened on Wednesday evening? Teaser. Let me know if you know exactly what happened on Wednesday evening that would cause the rally in silver and gold on Thursday. Pete, you good job there. R Train, hey Bob, what about MasterCard for this week, please? R Train, I will write it down. I'm seeing Pete's got it. Pete's got the answer. We're going to go to the Federal Reserve's balance sheet in a moment. R Train, I got you, brother. Clark, NVIDIA. Yeah, we'll talk about NVIDIA. We traded that last week, and we're flat on it now. We don't have a position. Hey, Bob, a little bit of a friendly liquidity. There you go, brother. You got it. Pete's got it. Joel's got it. We'll go to that chart in a moment. Recession or inflation? Oil seems to be screaming recession. Well, it's going to be both. It's going to be both. You may have a bit of disinflation, but when they begin to cut rates, which ultimately they're going to do, then you're going to see oil do a rip your face off rally along with every other commodity out there. Pete, correct. Yep, nearly $300 billion. We'll give you the visuals in a moment. Okay. Hey, Jody, welcome. Okay, so let's continue on here. Let's go back to the 15-minute view. Oil's very weak. We may get a pop here, though. We're up a little bit. It's been beaten up. Copper prices. Let's go to the weekly chart for that weekly feel. Another week last week. A rejection at resistance. Let's stick with commodities a bit. Corn found support last week. Bullish reversal bar. Soybeans broke support. Soybeans breaking down. Wheat, bullish reversal bar. We may have the beginning of a bottom here. So we've been seeing weakness in agriculture for quite a while now, but it looks as though we're beginning to find a bottom. Is this now traders, commodity traders out there saying, wait a minute, I'm not going to sell the cheap. We have a problem with the Federal Reserve. They are trapped. And should these prices be higher? So I think that that's what's beginning to happen here in the commodity spectrum, at least with agriculture. Now, cattle, I didn't look for this symbol, and I always forget it. Cattle had broken down. There's a continuation breakdown. That's feeder cattle. I always forget the symbol. I don't want to bore everybody. Here we go. /L. Yeah, continuation breakdown last week on live cattle. I got to get my New York strip steaks a little bit cheaper. I mean, it's a bit ridiculous. So protein. Let's take a little look at volatility. We'll do /VX. Weekly chart. Is this week? Hold on, let me check it out. Yes, it is. So take note of this weekly chart. Breakout number 1. Breakout number 2 and retest last week. Do we get another breakout this coming week on volatility? Stokes are buying higher highs. Let me expand this a little bit. Nice right side building of a base. So you have weakness current on volatility. The question is, does it last? 15-minute chart. All right. What else do we need to go over here? 10-year yield is creeping up a little bit. A lot of technical damage last week. Oh, look at this. NASDAQ now filling a gap here. NASDAQ 100. It's probably going to retest this 50-period moving average, fill the gap. It's doing it right now. Let me take a sip of water and watch this. There's the bounce. All right, we'll see if that holds. Let's set up an alert here. Okay, good stuff. All right, let's get to it. I need to stop sharing for a second, then reshare. All right, I am sharing my audio. There we go. Good. This was shared with me. I did not find this. This was shared with me by one of our members, Talon. I thought it was pretty funny. It's indicative of what our banking system looks like right now, as told to us by the Three Stooges. Go.
How about the $20 you owe me?
Oh, yeah? Well, I only got 10, so here's 10 and I owe you 10.
Thanks.
Hey, Mo, you owe me 20.
Well, here's 10 and I'll owe you 10.
You owe me 20.
Here's 10, I owe you 10.
Here's the 10 I owe you.
Here's the 10 I owe you.
Here's the 10 I owe you.
Good, now we're all even.
How about the $20 you owe me?
Okay. That's our banking system. Okay, let's get to it. I saw this, I had to share it. Morgan Dollar. This is what you call a silver certificate. You could take this, note the blue stamp. You could take this to any bank and secure $1 worth of silver. They're gone. And the US dollar, and here's a Zimbabwe dollar. And then, of course, you have the bullet because of the peasants rising up with their pitchforks. Now, what happened as we proceed into the new trading week? Over the weekend, we had UBS, which is buying Credit Suisse, and of course, the Swiss government is going to backstop losses for UBS. Now, here's what they did. I was listening to the press conference. I got out of the airport, driving home. I jumped right on Bloomberg, and the deal is this: is that UBS takes first hit because there's all sorts of toxic derivatives on Credit Suisse's balance sheet, and nobody knows what's in there. So UBS takes first hit on any loss. And then after that, it's on the federal government. So they only do that because the Swiss government wants people to say, oh, no, it's not us that takes the loss. It's going to be UBS that takes the loss. However, after they take their negotiated max loss, yes, we're going to be the backstop for any future losses. So they're trying to be really, really cute. Ultimately, the Swiss government is going to be eating a lot of this debt, and UBS has probably got a pretty sweet deal here. So this topic is off the table. Money center banks going under is off the table. The question is, what happens with the regional banks? What happens with them? Because the Federal Reserve bailed out SVB and their depositors in excess of $250,000 of FDIC insurance, that's what you call a moral hazard, And the question was asked of Janet Yellen when she was in front of Congress last week by Oklahoma senator or congressman. Hey, Treasury Secretary Yellen, you bailed out that one bank over in San Francisco I have banks in Oklahoma which are seeing runs on deposits, and they're taking that money and they're moving it over to money center banks because Dodd-Frank bill says that they can't fail. They want their money out. Because you bailed out SVB, you're causing bank runs all across the country. Her response, we didn't intend for that to happen. There's no plan whatsoever to help out those banks until perhaps now. So at 5 p.m. this evening, the Federal Reserve, here we go. This is the one I wanted. I'm out of sequence here. Again, I just got back and I put this together really quick. I validated that this is accurate. I have the Federal Reserve statement here off of their website. QE, or quantitative easing, has been the bull sign for the last decade, but will not QE be the same? Folks, they're back. And we knew this last week. And the Federal Reserve is opening up swap lines effective tomorrow to backstop all the banks out there. And that is off of their own website here. I'll share out this link. So obviously they see a lot of problems in the banking sector. Did I highlight? I can't get this bigger. I have another chart of this. Where is, I thought I highlighted the, basically what they're doing is they're going back to QE, and I have more evidence of that right here. So here's the Federal Reserve's balance sheet. It's been declining for quite a while now, quite a while. If you go back 5 years, you could see that we peaked out back in early 2022, and we've been declining ever since, except for last week. Their balance sheet skyrocketed last week. And this report is released on Wednesday evenings after the market closes. So the Federal Reserve ramped up their balance sheet. All the money that they have taken off of their balance sheet since November was put back on in 1 week. That is QE, quantitative easing. And going back to when gold and silver took off last week, here's Thursday morning, straight up higher. So what was silver? What commodity traders are saying is what we've been saying all along. You need to be buying gold and silver. I haven't bought much lately because we have so much of it already. So, silver stocks, gold stocks, and paper silver. And we also have physical gold. Here is silver, straight shot higher. This is a powerful chart. This is going up higher, folks. If you've been just thinking about buying gold, buying silver, folks, we have a Fed meeting coming up. If they raise rates by a quarter basis point, or if they don't raise rates, I think that they are going to blow gold and silver through the ceiling, because they've already blinked. They've already shown on their balance sheet that they are going to buy up more debt. And that was reflected vastly on their balance sheet. Remember, $297 billion was the equivalent of what it took since November to drop off. They put on in 1 week. This is going a lot higher. Very, very quickly. Now, I'm going to pause here for a moment. And I would encourage you, go back to a Thursday night stock charts live. Go back to a Sunday night futures live. Please go back. I have talked about this chart until I'm blue in the face. But unlike times prior, the yield curve, and for those not familiar, I know a lot of you out there who've been diehard fans. We have a pretty big audience tonight, and I need to repeat it for those that are not familiar. The yield curve is a barometer that we use that's basically measures the yields of the 2-year versus the 10-year Treasury note. I'll have you look it up. I won't get into the mechanics of it, but basically they are inverted, and when yields get inverted, they have forecasted every single recession since 1955. We have been in a recession in my book since Q2 of 2022. Some people disagree. And so far on the month, this is one of the most bullish candlesticks I have ever seen in my life. This is a bullish key reversal, also known as, well, actually, not also known as. This is a bullish engulfing, also known as an outside reversal bar. If you're not familiar with what these terminologies are, link below my 5 top favorite candlestick patterns, 5-part video tutorial, linked below, free. And we are moving up higher here. Now, I've done the analysis in the past. Usually when we get up to around spot 1.5 to spot 6, let's say, the equity markets highlighted here, S&P 500 highlighted here in gray, tend to roll over and roll over very, very hard, folks. We're talking financial crisis hard. This is not a normal correction. If you thought that 2022 was a bad correction, you ain't seen nothing yet. Today's lows are tomorrow's highs in that type of an environment. I would strongly encourage you, reevaluate your portfolio. Are you on margin? Are you too big on margin? Because remember, you may not have a margin call today. You could tomorrow, just because the brokerages are required or do it on themselves to raise margin requirements. They're going to require you to put more cash on to stay on leverage. So please think about lightening up. Talk to your financial advisor. Let them know about what you're watching here. The yield curve is rising, and it doesn't historically mean good things for equities. What should you do? What is your game plan? What is my allocation to gold, silver, the gold mining stocks? Please, I'm begging you. You're getting the early preview of the hell, pardon the language, the hell that is about to get unleashed on the equity markets. Now, what we've been doing is we tried to short NVIDIA last week, and we failed. I stopped out pretty quickly. We got long pretty quickly, sold premium, covered calls, and we were called away. So we made that money back that we lost, then some. So net on NVIDIA last week, we actually made a profit, even though we took a loss on the short early on in the week. Those shares have since been called away from us because I didn't want to be away on holiday down in West Palm and being worried about Monday morning and the headline risk that was out there. I'm very, very concerned about this equity market. Now, coming out this coming week, we have nothing coming out tomorrow. We have Wednesday. It's going to be all about the Fed, folks. I think they're going to do a quarter basis point. Some people are saying no rate hike, no more. Securities predicting a rate cut. They're the only one out there, I believe. And I think that they will do a quarter basis point hike or flat. I'm torn 50-50 on either direction. Thursday, initial jobless claims. Friday, durable goods, big number. And then we're going to get the S&P 500 Flash Services Purchasing Managers Index. A read below 50 is a sign of contraction. A read above 50 is a sign of expansion. They're predicting expansion, but we're right on the edge. We've been in a services recession for a year minimum. That number's been below 50 for quite a while now, and things are not looking good economically. So buckle up. Now, they're getting ready to rally this market, yet the market remains 23% overvalued, or the Buffett indicator has it fairly valued. So we're going to say it's 23% extended beyond historical trend. We're still expensive. Long story short, And when you look at it as measured by the Schiller PE ratio, we're still expensive, 27.97 relative to the mean at 17. So this is not a market that is cheap by any stretch of the imagination. I do think that they're going to try to take it up higher. We're going to be shorting this rally. Now, they're starting to invoke Buffett. They're in panic mode. They are in panic mode. You have the Federal Reserve out there this evening announcing new swap lines with the banks to ensure their solvency. And they're bringing out good old Buffett. And look at this. Look at the size of the cash position that he's sitting with now, the largest in over a year. And look at the traffic, private jet traffic flying into, oh, they changed this. They took away the tweet. Here we go. Here it is. A large number of private jets landed in Omaha yesterday afternoon. This is dated the 17th. Jets flew from headquarters of regional banks, ski resorts, and D.C. Did Buffett just fly all regional bank CEOs into Omaha and offer a deal to save the banks? This is Western Alliance. I'm not sure which one. This is Zions, Key Corp. I don't know these other ones. But here is the map. All coming out of Colorado, California, and into Omaha. Incredible. Jets arriving 5 at 10 a.m., 3 at 2 p.m., 5 at 3:30 p.m., 5 at 5 p.m., 6 at 6:15, 3 at 7. This has been a very, very busy weekend for the power brokers. This is going to be a very interesting week. This is going to be one for the books. No doubt about it. We're going to skip this. Let's go to the closing charts for last week. Now, we've already gone over the yield curve, and we know that when it begins to steepen, that's when things get real fast in the equity markets. So the question we're going to ask ourselves when we do this analysis, are we seeing cracks in the dike on a weekly and on a daily time frame? So let's get through these. 10-year yield took it on the chin. No great shock. Looks like it's probably going low. It's testing the 50-period moving average weekly time frame. What did it do on Friday? I'm literally playing catch up here. Weak and probably going lower. So yields dropping down probably this week. Bond prices. This is going to be a safe haven trade, folks. If equities go south, they're going to go into bonds. They're going to go into gold and silver. They did not go into the U.S. dollar this most recent sell-off. The dollar did not catch a bid. The difference between now and 2008 is that when the financial crisis hit, the dollar was heavily shorted. Plus, it was still perceived to be a safe haven play. Now, the dollar is overly owned. You also have countries de-dollarizing, and you also have a crisis of confidence in the banks, in the U.S. dollar as the reserve currency. And what we've done, we've weaponized the dollar after the Russian invasion of the Ukraine. Everybody wants off the U.S. dollar, even our friends. The tips. I'm kind of surprised at this chart when it came up, given the fact that gold rallied last week. We did have a breakout, but we did pull off the highs. Maybe it's technical due to the fact that we ran up and into the 50-period moving average, which is declining. That's what usually happens. You need to get a pullback and then another running start at that moving average, which by the time it consolidates, begins to move back up again, will go from declining to flattening. The dollar. This is a pretty bearish chart. Second consecutive week of the dollar attempting to break out, and the second consecutive week of a rejection. We were down on big volume last week. Daily view. So it looks as though what we may be seeing here is this head and shoulders setup play out. I'm not ready to say definitely yet. It won't be definite until we break the neckline down here. But I'll tell you, it's not looking good for the dollar. The VIX. Now, let's go to the weekly chart. Weekly chart. We closed up on the week last week. So did a lot of S&P 500 stocks. So the question is, who wins? Who wins this game of chicken? Will it be the mega cap FANG names that were able to rally last week and hold gains? Or will it be the VIX? I'll tell you, the VIX is looking pretty good. And with the yield curve, which is steepening and steepening dramatically, longer term, I'm going to give you the odds favoring the VIX. And if the VIX is shooting up and through a 30 handle, which we hit last week, well, folks, look out below. Remember, we have not had a VIX over the past couple of years that have pierced 40. And I've said that we have never had, let's go to the quarterly chart. This is the reason why I did not believe that the prior lows on the S&P 500 were the actual lows, because we never had a blow off top on the VIX. Quarterly chart. Every single bear market since 2001 has seen the VIX at its highs of in 2001, 43.74. In the financial crisis, 89.53. COVID in 2020, 85.47. The high of this most recent rally in the VIX was only 38.94. It made it nowhere near being a blow off top on the VIX. That's why I've been saying, beware, beware. Don't get overly bullish here. You want to trade this market to the long side? Fine, go for it. But this is going to form a congestion area, which it has. This is a quarterly setup, and it looks as though we are going higher. Cup handle formation on stochastics, despite the fact that RSI has, or I should say price, has put in yearly lower lows. RSI hasn't blinked, hasn't broken down below this lower band of support, and is now threatening a breakout daily chart. So here's what I'm seeing here. I think that we are consolidating, and we're getting ready to rip up higher on the VIX. So again, folks, given the yield curve, given the quarterly chart of the VIX, the fear index, they're all telling you that you need to at least reevaluate your portfolio, stay off of margin, and get ready for all hell to break loose, and you must become your own central bank. What does that mean? You need to own physical gold, physical silver, not just paper gold. The COMEX, which is behind the GLD, if they were forced to deliver all the gold that the GLD professes to have, they'd go bankrupt. They don't have that gold. They don't have it. Let's take a little look at another way you become your own central bank, but this is highly risky. I dollar cost average into Bitcoin. I don't know what the end use is going to be for Bitcoin. I have no clue, but I do put a little bit of money in here just in case those that have been professing that Bitcoin's going a lot higher are in fact true. So this chart here of Bitcoin, this monthly chart, is no joke. This is extremely bullish. As a matter of fact, let's update this. because it is trading now. Monthly chart, Bitcoin is up nearly 22%. It broke out a couple of months ago back here in January, retested this month, then a follow through. This is going up higher. Money is rotating out of the US dollar and into gold, into Bitcoin, into silver, into the mining stocks, which finally caught a bid last week. Buckle up, folks. You're seeing sector rotation. And if you want to take a look at Bitcoin on a relative basis to SPY, monthly time frame, radically outperforming the S&P 500. You want to go deeper? Let's go to a daily chart. Look at how much Bitcoin is outperforming the S&P 500. So if you're not in Bitcoin, consider it. Consult your financial advisor. It's got to be right for you. There's a lot of people, naysayers about Bitcoin out there. I respect them. I understand it. But I do put a little bit of money in each week. I dollar cost average in. All right, what else do we want to go over? We want to take a look at equities. How did we close last week? The Dow Transports. They broke support last week. The Dow Transports are your leading indicator. They are your canary in the coal mine for the equity market. So goes the transport, so goes the rest of the market. And they are breaking down significantly. The Dow Jones Industrial Average closed down on the week slightly, spot 1.5% on volume. S&P 500 managed to eke out a gain. But take a look. Remember this chart. The VIX was up as well on the week. They're supposed to be trading inversely of one another. That means that, sure, people are buying the S&P 500, but they're also putting on insurance policies just in case. The trip Qs. Now, this is what I mean about equities probably going up this week, but not all equities. You want to buy equities that are hurt in a rising interest rate environment. Remember, yields are probably going to stay flat with a bias to the downside and ultimately go lower because the Federal Reserve is going to jack up interest rates. Cut interest rates. Cut interest rates. Last week, the triple Qs had a massive reversal bar, another outside reversal bar, and we broke out. This is going up higher, absent a event, a crisis. All things being equal, though, no crisis. The triple Qs are going to move up higher because they know the Federal Reserve, vis-a-vis their balance sheet and now the swap lines to bail out the banks, they are back in the QE business. Forget about more rate hikes. They're going to be cutting rates by the summer. The banks, obviously crushed. They're insolvent. They're all insolvent. Technology. Outside reversal bar. Mimicking the price action on the triple Qs. They're at resistance, no breakout. But Stokes, momentum is building here. They're going up. The semis, weekly chart. Same deal here. Outside reversal bar. Momentum rising. RSI, Stokes moving up higher. Volume. Look at this institutional accumulation. This is not mom and pop buying 100 shares of the SMH. These are your fund managers in there buying up the SMH because they know what's about to happen. Staples. Not a great week last week because why? Why do you need Staples for? That's a safe haven play. That's for suckers right now. Discretionary names, they were up over 2.25% on volume, no less. Emerging markets, down on the week. These are becoming interesting to me. We're probably going to be dollar cost averaging into emerging markets because after the big sell-off that we're going to get, I think that the place to still be will be silver and gold and emerging markets because the Western economies are going to get devastated. But emerging markets, when the dollar drops, there's going to be a dollar crisis. And when the dollar drops, remember, emerging market debt is denominated in US dollars. So if the dollar drops, it's like a tax cut for emerging markets. So they're going to rally. Plus, you have supply chains leaving China, going to India, Vietnam, Malaysia, Singapore, or I should say Indonesia. They're all going to benefit. Why? Because they don't have the debt and they make things. Energy. This is another indication that we are in recession or heading towards one. Energy is breaking down. Now, I have been reluctant to short energy because of the monthly chart, but that is very close to being over because we have now broken major technical support levels on energy stocks. The month isn't over yet. So we could rally back. We could recapture the support level, and this could turn bullish. I'm not ready to short them just yet. I want to see this candlestick close down below the support level, and then I'd be shorting any rally on energy stocks. Crude prices. This is the reason why you're seeing energy stocks get hammered. Crude prices are rolling over. Right now, this is going to be disinflationary, meaning inflation will slow. The however is that as they kill the dollar, you need to remember that the price of oil is denominated in US dollars at current. So as the dollar weakens, you should expect all commodities to begin to rally. And that is going to send inflation like that. And it's going to send stocks like that. GDXJ, gold mining stocks, up. We own them, folks, and we're going to be adding more of them. Up over 11.5% in 1 week. This is not a leveraged ETF. These are the junior gold miners. Let's check out the GDX. These are the seniors. They were up more. I was expecting less. They were up more, nearly 12.5% on the week. When did they begin to rally in earnest? Let's take a look. They were down on the 16th, which was Thursday, but on Friday, a big move after the release of the Fed's balance sheet. It took them time to get it, what was going on, but they got it now, and it's time to get long of these names. If you're underweight, think about buying more. What happened to my gold chart here? Where's my gold? Let's bring up gold. Gold. Folks, we've been in a 10-year 10-year consolidation on gold. And we are at the precipice of breaking out and above 2,000. We briefly hit a new higher high back in February of 2022, March of 2022. We didn't stay there long. I think that we're breaking through it. Where do we close? Holy crap, we broke through it already. We broke through it. This is what happens when you take 2 days off. We broke through. Holy cow. Whoa. Whoa. Folks, we have a major breakout here. Month isn't over yet, but gold is screaming right now. It's telling you a story. The markets send us signals. It's up to us and whether or not we're going to listen to them and act. Here's a candlestick view. Look at this outside reversal bar. Oh, no, this is not a new higher high. What was that tick looking that way for? I guess it's because it's a line chart. That doesn't make sense. So no, we did not put in a new multi-year high. This is I knew that seemed odd. All right, so 2078, that's the multi-year high we got to take out. We're not there yet. In fact, it's going to be an all-time record high. I think that we could be there this week. Let's take a look at a daily view. What a rip. We're overbought here. We're going to pull back on gold. And folks, you're making an opportunity here. And I'm probably going to buy some long-dated call options here on gold on any pullback. Let's check out the price of the options. Are they expensive or not? Let's go to GLD. Whoa, IV percentile blew out. But still, let me go to, so they're very close to the highs of the year. Implied volatility of the options. Let's see where they are on a more historic basis. Wow. Yeah, they're really expensive. IV rank of 83. But this chart's not really telling us that story. Oh, yeah, look at the blowout here. Okay, now it makes sense. Now it makes sense. Look at they pumped a lot of juice into these options. All right. I may be selling premium on gold. Okay. What else do we need to go over here? Let's take a look at silver. This is a leveraged ETF that we own. We own a lot of this. And it was up nearly 20% on the week. This is a leveraged ETF, though, to be fair. So awesome price action last week. Silver, gold, mining stocks. Folks, you got to be a part of this. Now, we've gone back since volatility has picked up. Our strategy has been to swing trade equities, sell covered calls against them, let them take it away. We don't care. We don't want to be overweight overnight. But we've gone back to selling premium. Now, JP Morgan, they pumped a lot of juice into the options. And what do? We began selling premium on JP Morgan. I had these charts up here. What happened? That's NVIDIA, Netflix. For those folks just joining in, I literally just got off of a plane a little while ago, ran into the house and got prepared. So my apologies for not being more prepared for this evening. Moderna, we're not in that one. Nike. Let's bring up JP Morgan. We have straddles here, or strangles on JP Morgan. Wrong chart list. So at current, we have the 145 calls we sold to open and the 110 puts. I'm probably going to be rolling down, depending upon the price action on Monday. We're going to roll down these calls and book profits there, roll down on this trade. So members, get ready for some alerts going into the new trading week. I had this all prepared and it's gone. Here we go. Okay. Tesla. We sold the 240 calls and we sold the 140, 135, something like that. Hold on, let me check. And we're just generating cash flow. These are market neutral trades. Doesn't mean if this market goes into a tizzy that we can't get hurt, but we can defend positions, close out positions, and we're pretty liquid here. We have the 130 puts. 130 puts on Tesla. I think that Tesla stock is probably going to rally. I may roll up those puts this coming week. We have a profit on both the call side and the put side overall on this strangle. We were up over 16.5%. Union Pacific, which is another one, we're up over 11%. Where's that trade? Here we go. And here are our strikes. 215, right? 215. Yeah. And 215 calls, 165 puts. That is our portfolio of options that are generating us cash flow right now because we sold the premium. We didn't buy the premium because the options were expensive. We sold them. We were the casino and not the gambler. So those trades are working out very, very well for us. Let's do some chart requests. We're running a little bit late here, so I'm going to go with some comments first. Are all options juiced because of the FOMC? No. Gold, everybody got the memo last week that, okay, the Fed's not serious. They never have been serious about raising rates. They were going to raise only until something broke. Something broke. They're not serious about fighting inflation. They are going to let inflation run rampant, and they are going to print like there's no tomorrow. If you think this last round of buying was bad, you ain't seen nothing yet. But when the selling begins in earnest, you're going to see the vast majority of equities have a lot of option volatility pumped into them because there's so much fear out there. And demand for options, that is what drives volatility. They are looking to see which companies don't have extradition laws. Who's that regarding? Hey, Bob, I think you're scaring everyone. I hope so. I really, really want to hope. I hope I'm scaring people. Talk to your accountant. Talk to your financial advisor. I'm a trader, and not everybody else is. So please consult your investment professional. If you were so worried about the market tanking, why not just short NVIDIA? Because we shorted NVIDIA. This is not a market. Yeah, I'll tell you why. Okay. I've already done the analysis. Going back to 2000, this gray area here is where historically, where equities begin to buckle once the yield curve steepens up and into. So simply because we're steepening right now doesn't mean that equities just drop. That's not what that means. It means that at some point in time, as this yield curve is steepening, they're pricing in a pivot. And historically, when the Federal Reserve pivots, here, that's when equities take a nosedive. Crash of 29, stocks tanked. Latin American debt, stocks tanked. 87, stocks tanked. These are all beginnings of pivots, yet we went into a bear market. So we're not ready yet to go net shorting the market. We want to short into strength. Now, if you want to take a look at NVIDIA and say, is it looking more better as a short this week than next or last? Yeah, because I shorted it right off of this support level. It looked as though it was going to break it, but it could have been a retest. So I didn't bet that we were going to break a weekly support level. I just said, you know what? I'm wrong here. I don't like my position. I'm out. And we went long, and it was the right decision to make. Now we have rallied. We enjoyed the rally off of this support level higher. And now I could look to short into, ideally, my price target was initially 245 to 250. Now it's 260, 270. We closed out last week at 2725. I hope that they smash these stocks up higher. There's going to be a story about NVIDIA. They have a great story about AI, but they are extremely expensive. So I hope they spike NVIDIA up higher. I love the company, but I want to be short it. But right now is not the time. This can go higher. Daily chart. Friday could have been a blow off. This is the first time I'm looking at this chart. I'm glad I didn't carry this stock overnight or over the weekend. Big volume. How did it close? 15-minute view. Oof, not a good close. They sold it off into the close. So we'll see what happens. Yeah, Don. Yeah, we went over that. We've been talking about that. That's on the daily chart, probably now on the weekly chart as well. It's been so long. It's a very long and established head and shoulders setup forming. Yes, agreed. The highest gold close is 2035 from 2020. Is that a fact? Did we not put in a new all-time high last year? Or was that a multi-year high? Let's go back and check. Uh, 2089 back in 2020. Yes, you're right. You're right. All right. Let's do some chart requests. Don, the weekly gold chart looks like a triple top. Nah, I'm not a big believer in triple tops. You rarely see them. They're like the golden unicorn. So I really don't believe in those. I think that gold is overbought on a daily time frame. We'll get a pullback. I think that on that pullback, it's to be bought. All right. So I'm going to blow through these really, really quick tonight because I'm exhausted and I'm starting to lose it. NEM, SNPS, the lovely Jody, Boyle, BAC, GDXU, MSFT, TZ. Sorry about the bankers going to Buffett's house are grabbing the silver. Yeah. You're welcome, Seymour. TLT, if you have time. Yeah, we could do that. Yeah, TLT, yeah. I kind of skipped that because I was talking about yield. So, yeah, you got a point. All right. BA and Meta. All right, we're going to leave it off with that, BA and Meta. All right, let's do it. Folks, we're going to be using TrendSpider, automated technical analysis, 35% discount code below. One of the very few, if not only, products that I promote. All right, let's do this. MA. Okay, so note I have overlaid on this weekly chart monthly support levels, and we are right at a monthly support level. We rallied off of it this month. We do have the 21 period moving average in orange immediately above, acting as a bit of resistance. Stokes are trying to flatten out. I think this is just the beginning of a consolidation on a weekly time frame. Daily view, You could tell by the automated trend lines. I did not draw these trend lines, folks. That's the AI. Boom. There you go. We hit the bottom. We bounce off of it. We remain in the downtrend channel. We did do a little bit of a breakout on Friday. We're probably going up higher. Keep in mind, though, you have declining moving averages immediately above. One's the 21, and the other one is the 20-period moving average. So we may not make it through there on the first go-around. You may need to pull back, get another running start at those moving averages, and on that second run, it'll probably move up higher, assuming, though, that the overall market is not moving lower. NVIDIA. All right, so NVIDIA weekly chart, we kind of already spoke about this. We blew through the upper band of a ascending wedge formation. NVIDIA is very extended here. I may sell premium. What's the premium looking like on NVIDIA? I got some pretty good money for the covered calls. They're pumping juice into, meaning volatility into NVIDIA a little bit. It's off of the lows, but still. This was 18 a few days ago. Now it's 24. So they're beginning to build up the implied volatility of NVIDIA. They're becoming more and more in demand. I would guess it's because you have a lot of call side skew. People can't afford these options, so they can't afford the common stock because it's trading at 257 per share. So they're buying the options, causing more implied volatility to get pumped in to NVIDIA. Daily view. Stokes are very, very extended here. Very extended. However, well, we didn't hold this breakout. We failed to hold the breakout. This is the AI. Automated trend lines. Pop. They gapped it up. This could be a quick short here. We'll keep an eye on the video. Okay. We'll probably be doing something with NVIDIA this week. So NVIDIA extended, very, very extended. They can push it higher if they break the Qs out and or the SMH. They can keep NVIDIA going up higher as well. ANET. ANET. Or is it AMET? Maybe I wrote this down wrong. Oh, there it is. Arista Network. I don't know this company. Wow. Wow. It's going up. I mean, it's leaning into its third standard deviation Bollinger Band. It's extended, but it can go higher. Stokes is strong. Momentum moving in. We've blown through the upper band of rising resistance. All right, so there's your uptrend channel. I think we're going here up to about 171 per share. And I would look to short into that level. but really frothy. But I do believe that it's going to head up higher. Daily view. Yeah, same deal here. Very strong chart going up higher. But I would be looking to short it at that 171. Once it crosses 170, I'd be nibbling on the short side. But itsy bitsy nibbles. Remember, there's no price for commissions, so just nibble. Stay small. NEM. I think it's going up higher. You have a higher low. We're coming off of support levels. I think we're going up a lot higher here. I haven't been this bullish on the gold stocks in a long time. Folks, it's time. The Fed is done. If they're done with tightening, you got to be a buyer of gold stocks because inflation, it may slow, but it's going to come roaring back with a vengeance as they begin to cut. Newmont daily chart, you're going to have resistance up at around 49 bucks a share. Just be aware of that. So if you want to buy here, stay small, wait for a close above $49 per share or a pullback to the rising 21-period exponential moving average. SNPS, synopsis, weekly view, outside reversal bar, aka a bullish engulfing. Again, you're not familiar with this terminology. 5-part video tutorial on my top 5 favorite candlestick patterns. This is one of them. It's free. Take advantage of it. We're going to move up here to 384.54 in that neighborhood. Give it, take a dime. This is going higher. Daily chart. They broke it out on Thursday. Retested on Friday. This is going up. This is a buy. Oil. Oil's a hot mess. I don't like it. I did not trade this second round of a rally. I didn't trust it. I have not had good luck with oil of late. I think it's going to break lower along with other energy stocks. I would avoid this. Remember, if we're going into recession, there's going to be less demand for natural gas. And don't forget, we're going into a season, at least in the Northeast, where you're not going to be using as much natural gas. So I would avoid it. BAC. All right. So BAC, Money Center Bank, by law, they're not allowed to go under. I think you got to buy Bank of America. Stokes are weak. I would nibble here, but you're at historical support. The algo is telling me with this red circle, yeah, we broke down below support. This may be going lower, perhaps down to $26 per share. So maybe you don't want to buy this right now. Daily chart. We have daily support immediately below. I would be a buyer here. Stop loss right below 27.55. If that fails, we're coming down here to 25.80. GDXU. It broke out last week. This is a leveraged ETF, not for the faint of heart. Expect a pullback and a retest this week. Remember, gold is very overbought, intraday base. It's going to take a rest. You're going to get a rest here as well. Wait for a retest of 41.50, then jump on it. Stokes are rising. Daily view. We broke out daily time frame. Again, wait for the retest. Microsoft is very overbought. I've already looked at this chart. I'm probably going to be shorting it on any strength. We are leaning into the third standard deviation Bollinger Band. Clearly, money is moving into the triple Q names. We closed out our short of the triple Q. And I'm glad we did because they're probably going up higher. Look at the weekly view here. Huge move last week on Microsoft. We're probably going up to 288 per share. We closed at 278.43. I think on an intraday basis is probably overbought and due for, 30-minute chart, lower highs at resistance. If they fail to break out and above 281, you're probably going to get a correction here intraday. Maybe pull back a couple of points, and then it's going to resume its rally. It's going up higher. Don't forget, it's Fed week. Anything can happen here, but I think that's what's going to happen. I'm going to look to scalp Microsoft short and then maybe get long. TLT for Talon. Looking good. We know that yields are pulling back. We have a higher low here. Let's illustrate. Higher low. Breakout. Done deal. We're going up higher. Especially if equities sell off, TLT is going up higher because money is going to rotate into the bond market. Boeing. No likey here. Lots of resistance above. We're holding these moving averages, the 20-period moving average. Daily view. I think it's sloppy. I wouldn't be a buyer here. If they pull it back to retest 190, I'd be a buyer down there. That's a pretty good support level. So Boeing, not loving right now. The Dow stocks, the big stodgy cyclical names, they're not doing well right now relative to the triple Q names. Remember, the triple Q names are going to benefit by lower rates. That's why money is going to rotate into that sector relative to industrials. Meta really lagged on Friday. On the week, though, it did pretty well. Failed, it was rejected at 2 resistance levels. Daily view. We closed just shy of a support level at 195 per share. I look to see whether or not it holds that support level. Then I would look to nibble to get long and then add more as we begin to close above 190, 198, then 202.50. We close above those levels. I'd be adding more on strength. I nibble now at support at 194, 193, and then add more on strength. And folks, that is about it. Dan, I will. Thanks, Dan. I'm gonna hit the sack now. I want to get up really early tomorrow morning. All right, guys. Thank you for being here. Everybody have an awesome night and a profitable trading week. Folks, remember, yield curve is steepening dramatically. The Federal Reserve's balance sheet is blowing out yet again. We know that the markets get very, very weak when they begin to pivot. It has already begun. Consult your financial advisor, please. Everybody have an awesome trading week. Members, I'll talk to you tomorrow. Be well.